Welcome to BusinessWings podcast, the business resource for the budding entrepreneur.
I'm Sally Grant at businesswings.co.uk. Today I'm talking to Darren Dale, partner and head of financial services at ELS International. Today Darren and I will be talking about the impact of the credit crisis and the subsequent banking collapse and what effect this has had on the mergers and acquisitions market. We'll also be talking about assessing risk in deals and how less haste and a little more speed could be a successful strategy to deploy when buying a business. Is the M&A market bearing up in the UK?
I think most people sort of review the press articles and everything else and believe everything they hear. They'll be despondent in the doom and gloom that's actually occurring in the market. I think from a practical perspective, I think there's a huge range of opportunities now open for most sort of either acquirees or acquirers. Most of the time now, I think it's a case of looking at the actual market itself and developing the opportunities that are available to people. I just think it's greatly reduced because of the limited cash withdrawals or cash resources, I should say, that people have.
So the banks are still causing a bit of a problem with raising funding in the M&A sector?
I think traditional lending will cause a problem anyway because most banks are now heavily tied down either to the government itself through sort of lending on their behalf, or simply just don't have the resources because of the interbank lending sort of restrictions at the moment. They actually sort of lend the money that they need to sort of give out to these people. But this opens the doors, I think, for the non-traditional route or the least used, i.e. the capital market or the venture companies.
Is that typical? Do you typically see sort of venture capitalists and the capital markets being used in deals?
We've increasingly found that a lot of the deals that we're looking at, most of the deals either of an internal nature, i.e. they've looked to acquire a part of an existing company's business and just want to take a small slice. Mm-hmm. But where most people are now looking at is they're looking for a straight acquisition of a competitor or something they can chain link into their own business to expand the market share or diversify their own sort of down to different market areas. A lot of them, what they're trying to do, go into, equity partners, they're looking for venture capitalists, or they're just willing to sort of go in on an initial basis on some sort of joint venture project.
From the current deals that you have within the office, are you saying that the venture capitalists have the money to lend?
I think the money is out there. There are certain individuals or groups of individuals that still hold money and always will do. And I think it's available to those that have the right deal. Mm-hmm. And what they perceive to be the right deal can change on a day-by-day, week-by-week basis.
Is there any types of deals being done that do look favourable to the venture capitalists at the moment? Is there particular sectors that seem to be alive?
There's no rhyme and reason at the moment, I'd have to say. I think a lot of people out there are looking for the less traditional type deals, are certainly a bit more entrepreneurial. Really just depending on who you market to, how you market and getting the right presentation and getting the due diligence done first. You wish you would be sort of a bit more of a mathematically sort of challenged in that, but unfortunately it's not.
Obviously ELS has a network across Spain and Portugal. What's it looking like over there?
Well, we have offices, our own offices over there, but we also have an international flavouring as well. We do sort of work with a lot of other companies, both in on and offshore jurisdictions. I think the credit crunch has hit pretty much everybody now. We're certainly getting reports out of Asia and Dubai that it's starting to hit over there sort of quite big.
I was going to say Dubai seems to be the powerhouse of development with deals being done left, right and centre.
And I think still deals are being done left, right and centre. They're just being done at a lot more sort of realistic pace now. The money is still out there. People still have money in sort of Dubai and sort of these sort of areas. It's then just a question of what they're going to invest into.
So they're almost being a bit more picky.
There's a global hit at the moment. People have stopped using money to plug into holes and they start thinking, well, do I really need this part of my business or should I actually restructure it? Do I need to go into this particular market because I can see that accelerating a lot quicker? It also would add value and benefit to my existing business. And what have I got in my current business that I just don't need, can't afford to have and need to shave off?
So they're scrutinising their deals and their strategies a lot more thoroughly, if you like, in light of the current landscape.
We recently did a roundtable seminar event. One of the key questions that came out of that was, do you think the banks recognise more or banks recognise enough risk in the appropriate deals that they're doing? And this could pave the way for many different people as well, business entrepreneurs or current. I think the risk analysis at the moment will have to be, do people recognise risk? Yes, they do. I think they recognise it more than they have done in the last 12 months, and I think the press reportings will bear us out for that one. Mm-hmm. Do they recognise it enough? No. But I think the scary point will be at this moment in time is people don't want to fully recognise their own risk positions because they're afraid of what they're going to find out.
Is that slowing down deals within the market? Are you seeing less deals closed?
Most people now are taking the extra couple of weeks, the extra couple of months, and sometimes a bit longer, as to say, well, is this deal the right one for me? Is this the right way forward? I think you're starting to see less deals close or less deals sort of happen on a rolling basis. Some people have taken the view as like, well, actually, I'm not quite sure what we want to do here. I think we want to actually buy this company, but we're not sure. Why don't we do something preliminary to start with? So similarly, sometimes people walk into joint venture operations with a view of actually buying out a part or all of the actual business in 12 months' time, and then work on that basis and just see how it flows.
Thanks, Darren. That was Darren Dale from ELS, the international lawyers firm.
BusinessWings podcast, the business resource for the budding entrepreneur.